What's your interest rate? As a lender, one of the most frequent questions we get almost daily from consumers is, what's your rate? And most of the time, it's the first thing they say when we're talking to them on the phone or meeting them in person. So here's the deal. There's no one universal mortgage rate that everyone can get. There are numerous things that determine what the rate will be. And even if your friend or neighbor just called the same lender that day, the rate you will be quoted will likely be different than the one they did. When you see a specific interest rate that is being advertised, that almost certainly does not mean that is going to be the interest rate that you receive. First thing is that the rate the lender quoted is in a certain period of time. The market changes daily, and so do interest rates with it, and sometimes multiple times during the day if there's volatility. So that rate can be outdated within a few days or just a few minutes. It was simply a rate advertised at a certain time within a certain criteria. And unless you can lock it in at that moment, it's just an advertised rate in a certain moment of time. Look, many people think the Fed sets the rates for home loans, which is absolutely not true. Rates are determined by mortgage-backed security pricing, which opens up daily, just like the stock market, and goes up and down with the market movement, again, just like stocks. Look, there are many factors that dictate what a rate will be. Some of the main ones are credit score, loan amount, loan to value, what type of property it is, if it's a condo, single family residence, a manufactured property, etc., and if the home will be used as your primary residence, second home, or rental property. So, as you can see, just checking to see what your rate is without a lot more information is basically impossible to answer. And look, more information on your goals is really needed to determine what rate is best for you. Many lenders will quote a rate that seems very attractive, but the devil's in the details. And if you're getting charged for this rate, it may not be in your best interest to take that lower rate. A rate slightly higher without any costs or points might be in your best interest. And believe it or not, an even higher rate might even make more sense because you might actually get what's called lender credit towards your closing costs if you need a little cash to close. When you hear about no-cost refinances, this is how that happens. But many consumers also use this for purchases if they are tight on funds and can use that money to lower their closing costs. So, here's the main advice to get the best interest rate for your needs. Shop around with different mortgage professionals, and assuming you can lock in your rate that day, they can provide you then with a breakdown of the rate and the costs associated with it. You can then make the best decision for yourself. And also remember, the higher your credit score is, the lower your rate will likely be. Make sure your lender is providing guidance on how to raise your credit score. If it's not considered excellent, then there's ways to hopefully improve it, and a good mortgage professional will guide you in that direction. So contact us anytime if you have any questions. We'd love to hear from you. Thanks a lot.